Hi, this is Matt Rush with Strategic Financial Partners. Here's the MassMutual Trust Company's investment review for September 2018. Global equity markets rose in August, with the S&P gaining 3.26%. The S&P 500 has risen for 5 consecutive months. International stocks fell 1.92%. Domestic stocks rose on the strength of second quarter corporate earnings, which are up about 24%. The economic news reported during the month was also positive. The domestic economy is benefiting from a healthy labor market, accelerating growth in consumer spending, and a healthy manufacturing sector. While the domestic economy is exhibiting strength, recent data regarding overseas markets continue to suggest that growth in Europe, Japan, and China are moderating. Fixed income investments rose 60 basis points during August. The yield on the 10-year Treasury closed at 2.81%, down 15 basis points from the end of July. Here's our economic and financial market perspective. Second quarter earnings for companies in the S&P 500 increased 24% from the same quarter a year ago. This was the second fastest rate of growth since 2010, with the highest growth achieved in the first quarter of this year. Corporations are benefiting from lower tax rates this year due to the tax reform bill and more favorable regulatory environment. As we expected, the Fed did not raise short-term interest rates at its July meeting. However, we expect the Fed to raise rates by 25 basis points in September and again in December, depending on economic data at that time. Consumer confidence rose in August to the highest reading since October of 2000. Higher consumer confidence bodes well for the economy going forward. The Fed and overseas central banks continue to be accommodative by keeping interest rates extremely low by historical standards, furthering the case for equities as an attractive investment for long-term growth. U.S. GDP growth in the second quarter grew at 4.2%, nearly twice the first quarter's 2.2% increase. Economic growth in the second quarter reflected higher consumer spending and greater corporate profits. The most recent official unemployment rate fell to 3.9%. The longer-term employment growth trend has been a healthy level and reflects a strong economy. On a positive note, housing starts have increased. Mortgage rates have also increased since year-end and bear watching to see if higher lending rates will dampen housing activity. The largest uncertainty is proposed tariffs, which the administration continues to negotiate with Mexico and Canada. We expect domestic economic growth to be around 3% for the rest of 2018. We also expect that the markets will continue to be volatile as investors return from summer vacations and begin to focus on the midterm elections and near-term risks associated with higher tariffs. September and October have historically been volatile for the stock market. Since 1950, the S&P 500 has averaged a 50 basis point decline during the month of September. Volatility has been elevated so far this year as investors adjust to greater levels of risk regarding tariffs, potential rising inflation, higher interest rates, changing monetary policy, and geopolitical risks. Despite all of the near-term risks, the strength of corporate earnings will continue to be a key driver of the stock market. We continue to be bullish over the longer term. The priorities of the President and the Republican-led Congress are oriented towards generating higher economic growth in the U.S. that should lead to higher corporate earnings. Thanks for watching, and we'll see you next time on the Investment Review.